Business Bootcamp and Resource Collective. Got a great session today. We will get started here momentarily. We're just letting everybody load into the Zoom app, and then we will get started. Everybody, thank you for joining the ACA Small Business Bootcamp and Resource Collective. I'm Robert Theobald, the Small Business Ombudsman and Vice President of Small Business Services for the Arizona Commerce Authority. I'm excited to have everybody here today for this great session we have planned. As always, we want to start by thanking all of our community partners. We could not do these bootcamp sessions without them, their expertise and their willingness to share their tools and resources and expertise. So we want to thank them. And this is just a small list of all the community partners. Over 80 have helped provide content and resources for the bootcamp, so we can't thank them enough. So the Small Business Bootcamp and Resource Collective is designed to help small businesses work through and emerge stronger from the COVID crisis. It is a statewide initiative supported by all of our community partners, and the bootcamp is going to continue on through December. We have almost the entire month of November and December scheduled out. We're getting close to it, and we will continue on into January as well. The Small Business Bootcamp and Resource Collective, you can find all the information for it on our website, on our bootcamp website. And on that website, it's the same site you went to find this session to register for it. On that web page, you can find the Resource Collective and the archived sessions. All of our previous sessions, over 80 of them have been recorded and are available to go back and review, to watch, download the materials that were part of it. They are available to help support you in your business and your business needs. On there is a Resource Collective, a link to it, and the Resource Collective provides resources, tools, and guides provided by our community partners to help small businesses in their goals to come back stronger than ever. This is just a simple list of some of the guides and resources available on the Resource Collective, and you can see anything from restaurants, unemployment, retail, salons, manufacturing, construction, safety are all available on the Resource Collective. So a quick look at next week's topics. Today, as you know, we've got the PPP is on tap. Next week, we're going to talk about fine-tuning your business plan and business planning as you wrap up this year and work into the 2021. And then on Thursday, we're going to have Bookkeeping 101, what every business owner needs to know about the basics of bookkeeping. Both those sessions are brought to you by the state network of small business development centers. Tuesday's session will be with Lou Farina from the Maricopa Small Business Development Center. And Thursday's session will be with Lisa Card from the Mojave Community College Small Business Development Center. Both great experts in their fields, and we're excited to have them with us. You can go on and register for those sessions now. Also, just quick updates and reminders of our Empowering Rural Communities webinars. We got one coming up next week. The Economic Injury Disaster Loan Program is still alive and active, and so if you're looking at getting an economic injury disaster loan, or you need to request for additional funding, you can give them a call, their customer service line, and address that. And then also, if you're looking for additional financial resources from COVID-19, you can go to our website, azcommerce.com, the COVID-19 page /COVID-19, and then go into the financial resources, and we have a list of the city, state, county resources available to small businesses on there. Additionally, our ArizonaTogether.org website is the state's information for COVID-19 information and resources for everyone throughout the state. Aside from the financial resources on our COVID-19 website, we have many other business resources. So please take a look at that. We keep it updated with news and other information. So also part of the bootcamp is to share with you real quick about the small business resources available through the ACA's programs. We have our small business services. We can help navigate throughout the programs that are available across the state through the SBA, SBDC, SCORE, local banking contacts, etc. Our workforce division can help with employers looking to hire employees or improve their employee skills by do some training. They have some great training programs. And then our Arizona MEP is available for small businesses, small manufacturers who want to grow and strengthen their programming in their business. Additionally, a lot of people are looking at side gigs or just starting a business as we come out of this crisis. And so we have a tool called the Small Business Checklist. It's an online interactive tool that helps business owners know where to go, who to contact for license, registration, and compliance when starting a business. So we're excited today to have our great PPP presenter back with us, Carrie Ann Todd. She's presented a number of times on the topic, and we're excited to have her back with some updates. So Carrie Ann, I will turn the time over to you and let you share your screen and get started.
All right, great. Thank you, Robert. Thanks to Robert and his team at the Arizona Commerce Authority for having me back. While I work to share my screen here, here we go. All right, we good, Robert?
Yep.
Okay. So if you've been doing the boot camps before, you'll know that I've been doing this for several months, and each time I try to give you some new information. So if you're new to the forgiveness process, meaning you're just starting out, you're just starting to learn the rules, you're just starting to figure out where you're at, this is not exactly a beginner's class on PPP. So I would encourage you to go back. As Robert mentioned, they've archived all of the previous boot camp sessions. So if you're just kind of starting out, I would encourage you to go back and look at the PP sessions from earlier in the summer, where we really dug into the basics, keeping in mind that the program has changed, 27 times since it was first came out. So anyway, if you have questions about the basics, go back and kind of look at those presentations, look at some online resources that the SBA has. Just know that this is kind of an update of things that have changed and things I want to draw attention to as we're kind of really heavy getting into the forgiveness process. Okay, so the second thing I want to say is that everything I'm going to say today is as of October 7th. I used to date my presentations as of the day I was giving them, and then I got burned like 3 times when I would date my presentation the day I was giving it, and then later that day, the SBA or Treasury or somebody would come out with something new. So I've dated my presentation as of yesterday. I've cruised the internet this morning looking for new information, and I did find a couple things we can talk about. But anyway, it's always changing, so just keep in mind this is what we know today. All right, these are the topics we're going to go over. We're going to talk about applications, when are they due, and how do you fill them out. There's an easy form out there, the 3508EZ. We're going to talk about who is eligible for that and make sure you're clear on who's eligible for that. I'm going to briefly touch on taxes and tax returns only because unfortunately the answer hasn't changed, but it's always the first question people ask. We're going to talk about equity transactions. There was some new guidance issued by the SBA last week, and we'll talk about that because it got a little dicey there for a while. I'll briefly touch on not-for-profits and government contracts. They're kind of just little miscellaneous provisions that I want to draw to your attention. Even if you're not a not-for-profit, many of you may sit on the board of a not-for-profit who got a PPP loan, so it might be of interest to you. And if you do work with the government in certain scenarios, there are some weird provisions. If we have time, and I say that because I have a lot of content in here and I want to leave time for the Q&A at the end because I know you find that valuable. We'll talk about FTEs just in general, kind of the basics, how it works, why you have to do them, how do you calculate them, all that stuff. And then we will have a Q&A session. I'm going to try really hard to leave at least 15 minutes for Q&A, but I also want to get through all this good stuff. Okay. So as of last Friday, the SBA had over 100,000 applications in their portal. So if you're familiar with the process, you have to first apply for forgiveness with your lender, right? So you do all the documentation, you fill out your forms, and you submit it to your lender. The lender is going to have their own internal review process. They may ask you for more information. They may ask you for additional documents. They may say they disagree with something that you've done. And so it's kind of and I think it's friendly. It's not intended to be a negative interaction, because they know you're trying, and let me tell you, they're trying too, because it's a very complicated program. So it's a friendly back and forth until they feel you've gotten the information in the format and with the data that they think it needs. Then they'll approve your application. I haven't really heard of a bank denying an application. They just come back and say, hey, we need more information, or hey, we need this document, hey, we need this, hey, we need this. Their goal is to help you get approved, okay? Their goal is not to deny you. So once you get past your lender, then the lender takes your application and all of the documentation that they have collected from you, and they upload it into the SBA's portal. And from there, the SBA has to do their review. Now, the lender has 60 days to do their review, and most of them are getting done with their review within a week, 2 weeks. So they're not taking the full 60 days, right? It's not in their best interest to take 60 days. And then the SBA, according to the program, has 90 days. So the SBA opened their portal on August 10th. So if you do the math here, we're looking at almost 2 months ago. And as of last Friday, they had approximately 100,000 applications that have been submitted to them. A very small amount considering how many PPP loans were issued, but still that's a sizable amount of applications to be reviewed. Now, yesterday when I was working on these slides, bullet point number 2 was none of them have been approved. This morning I found an article on one of the business pages that said the SBA is saying that they started approving applications on October 2nd and remitting funds to lenders. So that is what they said in their press release. I don't know of anyone locally, based on my discussions with our clients and the lenders that we have relationships with. I haven't seen anyone actually experience that. So maybe it's happening. I don't know how fast it's happening. Maybe they've, approved like 2. And so they went out and said, yeah, we're approving them. But I would think it would take them a while to get through the applications already in their portal. So I just want you to go into the forgiveness process knowing that from what we're seeing now, it's not going to be super fast. There's going to be some time involved. Okay, so what should you consider when you're determining whether or not you should go ahead and file for forgiveness? Okay, so your determining factor, in my opinion, should not be the portal is open, my banker sent me an email, therefore I should submit. Okay, just because your portal is open with your lender and your banker says, hey, you can submit your application now, that doesn't necessarily mean it's the best decision for you and your business. So let's talk about some of the reasons why you might want to wait. I would say item number 3 here. Oh, let's go backwards, forwards, let's see. Item number 3 here. If the loan is over or under the dollar amount of potential threshold for simplified forgiveness. So if you have a loan that's less than $150,000, our general advice to all of our clients with loans that are in that range is to wait. The House passed a revised version of the HEROES Act last week. If you followed the news at all, there's a lot of controversy and a lot of hoopla about that. But let's just focus on what's in the HEROES Act right now. So included in the text of that bill, okay, which is not a law, it's just a bill, it's still in the House, is provisions to reduce the paperwork and the documentation required to be submitted for anyone with a loan less than $150,000. Okay, if you followed along at all at how the math works for all of this, you'll realize that it's not simple. And so if you don't have to go through a lot of that process, you might just want to wait. So if you have a smaller loan, we think it's in your best interest to wait because we do believe that legislation is going to pass. Because especially this piece, the pieces that relate to the PPP that are in the HEROES Act, all of those pieces have bipartisan support. But as you know, it doesn't always work that way. If they asked me, I would say, well, carve out the PPP stuff, make it its own bill. Everybody thinks it's a great idea. It'll pass the House, it'll pass the Senate, the president will sign, everybody will be happy. But unfortunately, it doesn't work that way. So anyway, that's advice, the best advice I can give you if you have a smaller loan. Other things to consider: have you spent the full amount of the funds? I can't imagine that you have not. Even those of you who may have gotten the loan at the very end in the 1st of August, where we August, September, mid-October, you've probably pretty close to spent all of the money. Are you trying to sell your business, or are you trying to buy another business? I've got a whole section on equity transactions that we're going to talk about, why that might affect whether or not you file for forgiveness. Tax planning and timing of deductibility, we'll talk about that in the slides I have later on taxation. Do you need to make business operating decisions that may include FTE reductions? So there are some lenders that are allowing you to file for forgiveness before your 24 weeks is over. And those, their interpretation is you stop counting FTEs as of that date. So if you're really struggling and you need to do some layoffs because your business just hasn't come back, right? And all your PPP money is gone, you can't afford to keep everyone around like you have been. It might make sense to just go ahead and apply for forgiveness so that you can make those hard decisions that might include layoffs. So that's something to consider. Let's say you're a larger company that has financial statements and you have debt covenants with your lenders. Maybe you have certain ratio covenants, or you have whatever. Or do you have covenants that you're going to violate if you keep that PPP debt on the books? Now, if you have a discussion with your lender, I'm guessing they would probably waive the covenant violation, knowing how the PPP program works. So that's a discussion to have. And then, is your lender accepting applications? I think all the banks are accepting now, except for maybe one or two of the really large ones, and they're promising that they're opening soon. So those are some things to keep in mind. So again, if your loan is less than $150,000, we think you should wait for that legislation, reduce kind of the headache on yourself. There's plenty of time to do the waiting because you have 10 months to apply for forgiveness after the end of your covered period. So let's say you got a PPP loan in April, May, your 24 weeks is ending right around now. You have 10 months from now to apply for forgiveness. So there's plenty of time for you to kind of take a wait and see approach if you fall into that category. So anyway, our takeaways are kind of don't rush to apply unless you're ready. In other words, don't let your lender push you to apply if you don't feel comfortable doing that. It should be the right decision for you. There is legislation continuing to evolve. Just stay in touch with your lender, and there might be some lessons they're learning once the SBA does start processing applications and giving them feedback. They might learn more that you might benefit from. All right, so how do these applications work? So like I said before, some lenders are letting borrowers apply with less than 24 weeks of costs and before 24 weeks have elapsed. Other lenders are only allowing you to apply after your 8 weeks or 24 weeks, whichever you've chosen, and only after the covered period has ended. So in other words, they're saying, no, you have to wait till the end of your 24 and you have to report data for all 24. Regardless of the fact that you're done spending the money after week 12, they want you to report 24 weeks of data. So understanding what your lender wants is going to be critical, because our experience is that lenders are asking for different things. Now, why are they asking for different things? Well, because the guidance is unclear. So the transition period, let's say you spent all the money in 12 weeks, but the lender says, oh, you have to wait till 24. Why would they do that? Well, because there's no guidance on how you calculate certain limits and when you have to stop counting FTEs if you spent the money after, say, week 12. So what does that mean? There's a limitation on employee wages. So if you are submitting on the 8-week period, you can only include employee wages up to $15,385. If you are submitting on the 24-week system, you can include $46,154. Okay, the math of that works out to $1,923 per week. So the question is, if you're filing on the 24-week system, but you spent all the money after 12 weeks and you only want to report 12 weeks of wages, what's your limit? Okay, it should logically be more than $15,385, but should you get the whole $46,154, or should you get 12 times, I don't do math in my head, sorry, 12 times 1,923, which is 23,076. Should you get some sort of prorated limit on your wages? So they haven't answered that question. And then they haven't answered the question on FTEs. Can you just stop counting FTEs after 12 weeks, 16 weeks, whatever the number is? There's nothing magical about 12. I just keep saying 12. Do you have to keep counting your FTEs the whole 24, or can you stop at that point? That's the end of your FTEs. You take the average and you're done. The SBA and Treasury have not answered those questions. So what they've done is basically leave it up to the lenders to interpret, and the CPAs who are trying to give guidance, right, to their clients. So I think what's happening is the lenders have said, okay, SBA, you're not going to tell us what to do. We're not going to go out on a limb and guess what you want. So we're just going to make everyone report 24 weeks. And it's a very practical approach, actually, by a lender to do that. Because if they interpret something differently and they approve an application and it gets up to the SBA and the SBA comes back and says, yeah, no, that's not what we wanted, makes them look bad, right? So until we actually start getting a lot of applications back from the SBA so that the lenders can get insight into what they do like and what they don't like and what they will accept and what they won't accept, this is kind of what we're stuck with. So that's why I keep saying, ask your lender what they want. Unfortunately, the other day we asked a lender what they wanted and they said, ask your CPA. And I said, well, that's not a good answer because the CPA says, ask your lender. So anyway, I fully believe it's in the lender's court because they're the ones with the task of reviewing and approving the applications. But you might get a little pushback on that, which I know can be frustrating. Okay, let's move on just a little bit. So what covered costs should you use, right? So under the program, you're allowed to submit several types of payroll costs. You're allowed to submit gross wages, health insurance paid by the employer, retirement contributions paid by the employer. You're also allowed to submit a lot of non-payroll costs like rent, mortgage interest, and utilities. So very early on in this process, back in the June-July timeframe, especially when we were all kind of stuck with an 8-week covered period at the beginning, everyone was trying to have to grasp every possible cost they could in order to be able to spend all the money in the 8-week constraint, right? Now that we're this far out and we kind of have some hindsight to look at, our opinion at this point, BeachFleischman, is that if you can reach 100% forgiveness with payroll cost only, and when I say payroll cost only, I mean literally just gross wages, not health insurance, not retirement. If you can just get there with gross wages, that's our recommendation, is to try to fill out your application just including the gross wages for your 24 weeks, which should get you to full forgiveness. Now, why would we say that, right? Because the documentation requirements for non-payroll costs can be really burdensome. And I can give you some examples on how that is. So, that might be kind of a shock to you. You might think, oh my gosh, I pay $25,000 of rent per month. Why wouldn't I want to include that cost? That's a big amount. You absolutely can if you want to. I'm not saying that you shouldn't. I'm just saying here's why you might want to consider not. In order to substantiate your rent, for every location, you need to provide a copy of the lease to the lender. So if you have multiple locations, we're talking about multiple leases. And the lease needs to verify that you held that property and were releasing that property as of February 15th, 2020. Okay, now there are some transition rules, like let's say your lease expired at the end of February and then you had an automatic renewal. That gets complicated. Then you'd have to give them the second lease, right? But they want to see the lease to know that you were in that space and paying rent on February 15th. Then you also have to give them proof of the amounts you expended. So if your rent is $25,000 a month, they want to see proof that you paid $25,000 for April, $25,000 for May, whatever the months are that you're claiming. So we're talking about a canceled check. If you pay by EFT, we're talking about a bank statement with the EFT highlighted. So all of that just for rent. The same applies for utilities and mortgage interest for that matter. So for utilities, they want to see a copy of the invoice for the period that includes February 15th, 20 to prove that the service was in place on that date. Because the requirement of the program is that you can only include expenses for services, rent, mortgage, for things that you had in place as of February 15th. So in other words, if you went into a new lease on April 1st that you did not have before, okay, that's not includable because you didn't have that in place as of 2/15. So anyway, so for utilities, you have to include that February invoice that shows that you had the service at that location on that date. Then you have to include copies of all the invoices that you're including in the covered costs on your application and verification of payment, right? Either a statement, right? If your statement shows a roll forward, right? Here's last month's balance, shows where you paid it. Here's this month's balance, and then here's what you owe. You could include that. If your invoices don't have a statement roll forward, you would have to include either the canceled check or show on your bank statement the EFT where you paid it electronically. So that's a lot of documentation for these non-payroll costs. Whereas if you're documenting payroll, you can just give them the payroll register, right? Because the payroll register is going to have gross wages. It's going to show all of your employees. It's going to show all of their hours. So just from a documentation perspective, that's been our approach in the last several weeks, is that just try to go with payroll to make it easier on yourself and also easier on your lender, and then ultimately the SBA to review and approve your documentation. Okay. Oh, and I should have said at the beginning, I'm going to do all Q&A at the end instead of trying to, because I don't have any assistants for me. It's just me. So I don't have anyone that can kind of scroll through the Q&A. So I will get to all of those at the end. Okay, so let's talk about the easy form and determine whether or not you're eligible. So the eligibility requirements are simple but confusing. So I've tried to simplify them in the slides and color code them so you know exactly what I'm talking about for each one of the ways. So there's 3 ways to qualify to file the Form 3508 easy, okay? And the first one is if you're a sole proprietor with no employees. And I've called that item number 1, and it's this turquoise blue color. So on all the rest of the slide, on the following slides that relate to this particular way to qualify, it's going to have that pretty turquoise blue color. And then there's 2 other ways, and I have them color coded. And I know that sounds a little ridiculous, but it gets technical. So I want to make sure you're associating the documentation requirements with the appropriate way to qualify. Okay, sole proprietor with no employees, you're going to choose the 24-week period. And then the formula for your forgiveness is very simple. It's your 2019 Form 1040, Schedule C, line 31, divided by 12, multiplied by 2.5. The maximum forgiveness you can get is $20,833. Now, some of you may encounter situations where you got the PPP loan with a draft Schedule C, or your lender let you use your 2018 Schedule C, which by the way, they weren't really supposed to do. And you ended up with a PPP loan that's different than what you would have been eligible for if you'd had your final Schedule C. So you're going to have to kind of work through that with your lender, and depending on how the numbers work out, you know, your forgiveness may not be 100%, your forgiveness might be more. I know you can't have more forgiven, but you might have less forgiveness because the loan amount is slightly different than what it, quote, should have been. So we're not sure how the lenders are going to work through that because I know everyone was just grappling, right? It was March 26th, the program came out. They said, you know, get your applications in by starting April 3rd, and it was a mad rush, and it was the longest 7 days of my life. That's probably the longest 7 days of your life if you're going through that process. So anyway, hopefully they'll be gracious, but be prepared to kind of work through that if those numbers are different. So what do you have to submit with your application if you are under option 1? You have to sign a certification statement and provide a copy of your 2019 Form 1040 Schedule C. Now, the 2019 Form 1040 is not even due till next Thursday, okay? I mean, it's due, but next Thursday is the last day you can file timely your 2019 tax return. So if you haven't finalized your tax and filed your tax return, you need to do that before you roll into forgiveness so that you are using a final form that lines up with what you're filing with the IRS. Okay, what do you have to maintain but not submit? Okay, so this is how the slides are set up. We talk about how you qualify, we talk about what you have to submit, and then we're going to talk about what you have to maintain but not submit, because those are 3 very critical things for this easy form. So you have to maintain, but you do not have to submit for option 1, all records relating to the PPP loan, including the documentation submitted with your original application, support for the necessity of the loan request, and eligibility for the PPP loan. And that comes straight from the application itself. That's really not my interpretation or me putting things together. That just comes straight from the application. And you need to hang on to that for at least 3 years, preferably 6. I believe the instructions say 6 years. That's how long those kind of the statute of limitations on this, that the SBA could come back and audit you if they so choose. So don't get through the forgiveness process, you know, throw a party and say, whoo, I'm done, and then toss your documents. You need to keep this stuff around for 6 years. Okay, let's talk about option number 2, which in this case is green. All right, a green little 2. If you're colorblind, I apologize. I'll have to stick with just the numbers. Okay, so the second way to qualify for the easy form is to meet 2 tests. So the first test is to certify that you did not reduce the annual salary or hourly wages of any employee by more than 25% during the covered period as compared to Q1 of 2020. Like I said, go back to the previous presentations I've done for Arizona Commerce if you want some details on this 25% requirement. So you have to certify that you did not do that, and then you have to certify that you did not reduce FTEs between January 1st, 2020 and the end of the covered period. So if you meet both of these tests, you qualify for the easy form. Now, what do you have to submit? So to submit, if you qualify under option 2, you have to sign a certification statement. You need to give them copies of all the documentation that support your amounts. Right, payroll registers, 941, all that stuff for payroll. If you choose to include excuse me, other costs, you got to include all that stuff we kind of talked about before: leases, invoices, proof of payment, all of those things. And then the last thing is you have to give them the average number of FTEs on January 1st, 2020 and the end of the covered period, whatever that is for you. Okay. That's what you have to submit. And that could be a lot of stuff depending on, you know, how many payrolls and what other non-payroll costs you're going to include. Here's the stuff you have to maintain but not submit under option 2. Same as the first option: all records relating to the loan, documentation for the application, support for the necessity, and the eligibility for the PPP loan. You have to have documentation in your records that salaries and wages were not reduced by more than 25% computed by individual employee. So I know a lot of the clients I've been working with have said, well, I just know we didn't, you know, we wanted to protect our employees. I know we didn't. So I believe you, trust me, I believe you. But if somebody asks for additional documentation, you need to have in your records basically proof that you didn't by individual employee. So however, you know, you put that together, you need to have that in your records. What else? FTE computations to show that you did not have a reduction. And then it also suggests in the application instructions, payroll records for January 1, 2020 through the end of the covered period by individual employee. Okay, that could be a lot of payroll records, right? Because we're talking January 1 of 2020, and if you're going through 24 weeks, for some of you, that's the end of September and even later. So I think what they're saying is, why don't you keep with all of your PPP documentation, basically a copy of all your 2020 payroll records. That way, if we were to come in and audit you, you already have it all together. You don't have to go digging back in your other files, right? That will probably be in a dusty storage bin by the time the SBA comes. They're just saying, keep it all together, keep it handy, have it ready to go. And then support for any FTE reduction exceptions claimed. You can look at the instructions exactly what that's about. Okay, so that's option 2. Option 3 is one that a lot of companies are gonna be able to comply with, depending on your industry. So we're gonna meet 2 tests once again, 2 different tests. Sort of certify that you did not reduce annual salary or hourly wages of any employee by more than 25%. So it's really critical that you didn't reduce wages in order to be able to file this easy form. Okay, it doesn't preclude you from getting forgiveness by using the regular form. It's just they're saying if you want to do this shortcut form, you have to certify that this actually happened. And then the second one, let's certify that you were unable to operate during the covered period at the same level of business activity as before February 15th of 2020 due to compliance with COVID restrictions. So we're going to talk about that second bullet point pretty lengthy because I'm going to tell you what we think it is and what we think it's not. Okay. So what do you have to submit if you're filing under option 3, which is our beautiful fuchsia, magenta, whatever you want to call it? Again, sign a certification statement, copies of your payroll registers, 941s, whatever, for your payroll costs, copies of invoices, leases, proof of payment, all those things we talked about for your other costs that you're going to include. Again, all records relating to the PPP loan, your PPP application, all those things, documentation that you did not reduce anyone's wages more than 25%, computed by individual employee. And then you have to also include in your documentation, remember, we're not submitting this, we're just keeping this in our records, support for the inability to operate, including relevant financial records, right? So you need to have in your documentation, you know, balance sheets, income statements, whatever, that show you were impacted and you were not operating at normal, okay? For example, let's say you were in a retail situation, all of retail, your retail specifically was shut down. You were unable to bring customers into your store. Maybe you could have, you know, delivery at the door, delivery at the parking lot, whatever, but it had a significant impact on your sales. Keep the records that show the reduction in your sales as soon as the COVID regulations were put in effect. Now, you also need to have copies of whatever it is that caused you to be unable to operate. So if your business is in Tucson and let's say it was the city of Tucson that said, these businesses are non-essential, they cannot operate, okay? All of that was publicized, right? And it was published, and it wasn't just on the news, it was written documentation. You need to go find that rule and keep a copy of it. Most of this stuff can be found on the municipality's website. So a lot of the municipalities have a COVID-19 section of their website where they're keeping all of their orders, right? By date. On March 16th, we have this order. On this date, we have this order. So you need to get right now, before you submit your application, copies of all that stuff, because it may not be available if you were to get audited in 2 years, right? So you want to get all that stuff now and show exactly, look, I couldn't operate because of this, and keep that in your record. So I think that's really critical. What would not qualify? So what would not qualify is my sales are down because I have less customers. So let's take, for example, an engineering firm. So let's say you have an engineering firm, you work in the construction sector, you are deemed essential, but because of whatever, you have less customers. Okay, so you are still able to work, your employees were still able to work, you are still able to function at 100% capacity, you just have less customers because the economy constricted. That does not qualify for this exception that allows you to do the EZ form. And I think that's a critical distinction that everyone should kind of understand. It has to be a literal physical restriction on your ability to work. A restaurant, and that's the easy one, right? Restaurants were told to shut down, then they're told 50%, whatever it is. Those are easy. Okay, let's roll into taxes and tax returns, and I'm going to cruise through this pretty fast because honestly, the answer hasn't changed. So as of yesterday, the forgiven portion of the loan is not taxable, and the expenses for which the PPP money was used are not deductible. Okay, this essentially means you're going to have more taxable income than you expect. Now, there is bipartisan support for changing this. It's in the HEROES Act, like I told you before, that has been proposed by the House. It's in with all the small business PPP stuff. Nobody wants the expenses to be non-deductible. But because of the way it came about, it takes an act of Congress, literally, to make them non-deductible. Everyone seems confident that that will happen by year end, which if it doesn't, I mean, Lord help us all, because filing season for tax returns is going to be disastrous. So we're confident that it's going to happen. It just hasn't happened yet. So if you're a fiscal situation where your year end is like July, August, September, even April, May, you need to work with your CPA, whoever prepares your tax return, and talk about what that means for you. Definitely, in our opinion, extend your return. Don't file under this terrible current interpretation that we have. Extend your return. Hopefully it'll all get worked out before the extended due date. So, but one last thing is I wouldn't expect your CPA to tell you what to do. It's really a business owner, business risk decision as to whether you prepare your extension, pay your estimates based on the way the current law is, or if you do that assuming the expenses will eventually be deductible. Okay. I'm not moving through these fast enough. I told you there was a lot of stuff today. Okay, so equity transactions. So last week, the SBA came out with a procedural notice which talks about changes in ownership. And this was critical for everyone because a lot of you have situations where A, maybe you're going to sell your business, B, maybe you're going to purchase another business, or maybe it's something as mundane as one of your partners is retiring. You want to promote someone within your firm to partner or whatever. There's lots of things that happen in equity that just happen in the normal course of business and that can't just stop because the PPP program came along, right? So there's a lot of questions as to how that would affect your loan because, if you sell your business, that's technically a loan default, not just of a PPP loan, that's a loan default of any loan that you have, right? Can't sell your business without the lender's permission. So they finally came out with some regulations on this. And I have a lot of information in these slides, but if I try to go through them, you're going to end up like glass-eyed and really confused. So I'm just going to go really high level and say, when Robert sends out the slides later and you think this applies to you, read through them in detail. Okay, so if you have a single transaction or a series of transactions, and I say series because, law firms are a perfect example. They might bring in a partner on June 1st, and then a partner leaves on August 1st, and they bring in another partner on September 1st. So a series of transactions has to be considered as well. If it's less than a 20% change in ownership, all you have to do is tell the lender but they don't need to involve the SBA. And that's really welcome relief, because most of you, I think, are having this issue will be in this situation. Now, if it's more than 20%, you need to notify your lender, and the lender has to notify the SBA. But if it's between 20 and 50%, the lender can approve it and you just move on. Okay. If it's over 50%, and I have a lot of slides here that talk about over 50% change in ownership, or if you're going to sell, if you're doing an asset sale, not a stock sale, an asset sale, and you're selling more than 50% of the assets. In both of those scenarios, essentially you need to escrow the dollar value of the PPP loan at closing, file your forgiveness application, and then once the forgiveness application is approved or whatever, then those funds can be released from escrow. It basically just protects everyone, but you probably want to have that documented in your sale purchase agreement. So once again, below 20%, tell your lender, but you're okay. Between 20 and 50, tell your lender, they've got to tell the SBA. Over 50, you're probably going to have to get your lender involved, probably need an attorney involved, and you're going to need to escrow in closing, which is not everyone's favorite answer, but at least it's an answer we can work with, because it doesn't say it's a default. And that's really what everyone was worried about. Okay. All right. Okay. Not-for-profits, just really high level. A lot of not-for-profits get revenue from cost reimbursement grants from the federal or other municipalities. If you have a PPP loan, whatever costs that you submit for forgiveness, you cannot also submit under a federal cost reimbursement grant. In other words, you can't include the same wages in both applications. The federal government says that's double dipping. So you need to strategize which costs you're going to include in the PPP application, which costs you're going to include in your cost reimbursement grants, and hopefully maximize both, right? So that you don't miss out on everything. Government contracts, these are contracts for anyone who has to follow the FARs. If you don't know what the FARs are, that's okay, then this doesn't apply to you. If you do know what the FARs are, then you need to look at this. There's some DoD guidance that's out there that talks about any forgiven PPP loan cost may have to be a direct reduction of the indirect cost pool. And I'm admittedly not an expert on FARs, but I know that that's a bad thing because it affects you for your indirect cost reimbursement rate for a whole 12 months. So if you are in a situation with government contracts and you are subject to the FARs, you want to dig a little deeper into this and consult with your CPA. Depending on how much FAR work you have, it could affect how you apply for forgiveness. So I just wanted to throw that out there so that you were aware. Okay. I'm not going to go through the FTEs. This is kind of just a back to basics, how the FTEs work. And you can just kind of read through those after the presentation when Robert sends out the slides. Oh, I didn't mean to do that. But I'm going to hop into the Q&A so that I have plenty of time to answer the questions that are out there. So if you want to follow along in the Q&A, you can, click on the Q&A button and follow along as we go through. So what are you hearing about blanket PPP loan forgiveness for PPP loans under a certain dollar amount? Okay, so what I know is it's in that HEROES Act that the House passed. It has bipartisan support, but the whole HEROES Act at this point doesn't have bipartisan support. So like I said, our advice is if you have a loan below $150,000 is to wait it out. Because it should work out well for you in that there's going to be less stuff that you have to submit to your lender and the SBA in order to get forgiveness. Okay, I've not received any documents back from the SBA. One is the SBA loan number. I do have the local bank loan number, but those are the SBA loan number. Okay, so all of that information should come from the local bank that gave you the PPP loan. So the money for your PPP loan came from the bank. So the bank gave you the money, the bank gave you the loan, it's just guaranteed by the SBA. So right now, the bank is the one who has all your documentations. So you need to go to the lender that gave you the SBA loan and get that information. Because honestly, you need copies of your loan documents. And the lender should have those as well, that show what your actual loan is, what the date of the loan is, all of those things. Okay, our loan was in excess of 2 million and will be audited. Should we wait for the audit before applying for forgiveness? No, they will not audit you until after you apply for forgiveness. So you need to, when it's best for your company, based on those considerations I went through before, you have to go to the lender, apply for forgiveness. They have to approve you. Then you have to make it to the lender, to the SBA. And then our understanding is that the audit process is going to happen after the SBA either approves or denies, assuming they're going to approve, right? So it's all predicated on you going through the whole entire process. They're not going to initiate the audit first. Okay, we use the 8-week period and use the loan proceeds. Can we reduce FTE? So that's kind of what I talked about. So if you're going to file under the 8 weeks, and I'm assuming your 8 weeks is way past finished, then yes, you can reduce FTEs. The SBA can't make you hold on to employees beyond your covered period. So there's no adverse consequences. Now, if you're in the 24-week period, the answer to that is kind of unknown. I talked about that. If we do wait and our loan is less than 150 and goes into 2021, will we be taxed on the loan? So I talked about that too. Currently, the forgiven portion of the loan is not taxable, and that's not going to change. What may change is the deductibility of the expenses. And the expenses have already been incurred, right? So the expenses are currently in 2020. That's not going to change. So whether your proceeds, meaning the forgiveness amount, hits 2020 or 2021, it's non-taxable in either period. So really it's the 2020 tax return that we think is really affected here. And like I said, we're hoping for guidance. I'm less hopeful every day that it's going to be guidance before November 3rd, but I sure hope it's something not long after November 3rd. Okay, for utilities, is forgiveness for utilities for just, okay, so this question is cash versus accrual. Is it what you paid during that period as well as incurred? And the answer is yes. So the rules on what you can include as covered costs during your covered period are very generous. So in other words, if you fell behind in your rent or your electric bill or whatever, and you, by April 1st, let's say you got your loan April 15th. By April 15th, you were really behind on your bills, but you got the PPP loan April 15th and you were able to catch up on your bills. You're able to include whatever bills you paid after you got your PPP loan, even if the costs are for items that were incurred prior to the covered period. So you can get a lot of costs. If that situation happened to you, you can get a lot of costs in 8 weeks using that interpretation of the fact that it's both. Okay, I'm trying to cruise through really fast. If I use the loan to buy a service truck worth less, no, you cannot buy property and equipment with your PPP loan. So you can only spend it on payroll-related costs, and other non-payroll costs, which is mortgage interest, rent, and utilities. You cannot purchase equipment. Let's see, if a company acquires secured debt subsequent to a PPP loan and can repay a portion of that loan ahead of the PPP loan, does the SBA allow? There's no restriction. So the PPP loan doesn't have any effect on all your other debt, but your lender should be able to clarify that for you. But it shouldn't have any impact on any other, what I'll call normal debt that you have with your regular lender. All right, you're welcome. You gave us example of $19.23 for a week. Is that for any loans under $150,000? That's for all loans. So basically the allowable payroll is an average of $19.23 per week. So now you don't have to apply that limit per payroll. You have to look at it in scope. So like if you have employees who might get a base salary of $700 a week, and then at the end of the month they get commissions, you don't apply that limit to each payroll, you would apply that limit in total. So you need to look at the application instructions to understand how those limits are calculated. I'd employ voluntary leave. What happens since that was not a layoff? Do I provide documentation? So as long as you did not replace this person, then yes, that FTE loss does not count against you. So I would draw your attention to the loan application instructions, not the EZ form, but the other one on the SBA website. And I have that link here. I'm going to try to copy and paste that into the chat. Actually, yeah, I'll copy and paste that into the chat right quick. So bear with me here. Okay, so the link I just pasted into the chat is the link to the SBA website that has all the forms and the instructions on it. So I draw your attention to the instructions for the regular loan forgiveness form, not the EZ, and it talks about FTE reduction exceptions, and that's for Linda.
Hey, Carrie Ann, with that question from Linda, there was another question in the chat that was similar, where the business had some people voluntarily reduce their hours, and I believe their commissions that were tied with it because of the voluntary reduction.
Right.
So how would that work?
Okay, so it's kind of technical because it's all also predicated on the fact that you did not replace them. So in other words, if someone walks in and says, I got to take care of my kids, I got to do homeschool, I can't work anymore, you know, that's not your fault, obviously. But if within a week or two or during the covered period, you replace someone in that position, okay, you may not qualify for the FTE reduction exception, right? Because you maintained that job and you filled it with someone else. Now, if you did not fill that position, then yes, someone who walks in and resigns, or they say they want less hours or whatever, that definitely applies. So if you go to the regular application instructions and you look on page, and I'm scrolling through here, page 5, right in the middle, there's a whole paragraph. It's called FTE reduction exceptions. And it's not super straightforward, but it does walk you through. I posted that into the chat if you want to kind of cruise through there and read that. But it talks about how that works. Have you heard anything about if you have money not used for utilities, that they will roll the remaining amount into payroll costs that went over the amount? So I'm not sure I understand that question. I think it maybe gets back to the fact that it's kind of just easier to get there by using payroll only and not messing with utilities if you can. I know if you're trying to use the 8-week period, it doesn't work that way necessarily, you can't get there, but consider using just payroll. Okay, I'm assuming PPP loan forgiveness is classified as other income in the income statement. I would agree with that, right? It's not normal income, that'd be my preference. I have read some firms are suggesting inclusion in operating income since it's a form of a government grant. Okay, so I'm assuming this person has GAAP-based financial statements, and there are 4 choices for GAAP, and none of them are super great, and none of them are really authoritative. But I think we haven't done any financial statements that actually classify it because, of course, no one's actually gotten forgiveness yet. On the not-for-profit side, it is being considered government grant income, which for not-for-profit does go up in the what you would call operating income. But you know, anecdotally, to me, it doesn't make sense to put it in your top line revenue because it's not really normal revenue. But it kind of remains to be seen how that's going to shake out. Can everyone opt into the 24-week option? Absolutely. I kept an employee on 40 hours but reduced overtime. Does that keep me compliant? Yep, it does. The base for the averages that you use is 40 hours a week. So overtime doesn't have any effect on your FTEs. Do we still have a 10-month window if we file for forgiveness if we use the 8-week period? Absolutely. So if you got your loan in April, your 8-week period ended in June. So you have 10 months from June in order to file your forgiveness application, which puts you in what, April? So you still have plenty of time. The 3508 is confusing when trying to calculate. Okay, lines 5 through 7. So line 7 says to divide 1 by 0.6. Okay, so lines 5, 6, and 7 are the 3 tests, right? And if you look at line 8, the description for line 8 says, enter the lesser of 5, 6, and 7. So line 5 is your total costs. Line 6 is the amount of your PPP loan. And line 7 is a test to make sure you spent at least 60% of the proceeds on payroll, which is a requirement of the program. So all 5, 6, and 7 are doing is computing 3 numbers that there are tests, and then you get forgiveness of the smaller of the 3. So I had that question yesterday actually from a banker that said, this is really confusing. I'm like, it is, just follow the instructions. And then on line 8, you've just put the smaller of those 3 numbers, and that's how you compute your forgiveness. Okay, Robert, it's 12 o'clock. Do you want me to keep going? I just have a few more.
Yeah, we can go through and finish the questions that are on there.
Okay. The PPP loan is counted in a company's leverage ratio and interest coverage ratio. So if you are doing GAAP-based financial statements and you're choosing the debt model, which says you leave the loan on your books as debt until it's forgiven, then yes, I would expect that that debt is going to be included with all your other debt in computation of your ratios. So if you think that's going to push you into a covenant violation, you probably just need to talk to your lender. I can't imagine any lender is going to call your debt because a PPP loan is pushing you out of compliance, but it's definitely worth a conversation. We submitted our forgiveness application several weeks ago. Yeah, Vicki, nobody knows. You could follow up with your lender, because your lender, you actually have a phone line too, right? I hope. Call your lender and make sure you've gotten through the lender's process. If you haven't gotten through the lender's process, you need to ask them why not. If you've made it through the lender's process and you're waiting on the SBA, that's the part we don't know how long it will take. Under the guidelines, they have to do it in 90 days. But like I said, they're kind of backlogged and they're just now starting to approve applications and forgive loan balances. Okay, they keep popping in. When I applied for the PPP, I had 2 employees, but they quit before the loan money was deposited. What should I do? Should I wait till the SBA reaches me, or I should call them? So you should not call the SBA. You should just go through, you're gonna have to go through the mechanics of the form and figure out what your forgiveness is gonna be. If you replaced those 2 employees, then you shouldn't have an issue here. If you didn't replace those 2 employees, you may qualify for that FTE reduction exceptions, and you'll be okay, but you kind of just have to go through the math and work with your lender in order to figure out what the answer is. So definitely don't try to call the SBA. I promise they're probably not going to help you, but your lender will help you.
All right, Carrie Ann, this is a good place to stop. We'll
Okay.
Wrap up with that question. That was a good question to wrap up with. Just a reminder to everybody, I did post in the chat box the previous PPP session that Carrie Ann did, where she does dive deeper into the FTE reductions, as she mentioned. So that link is in the chat box. I sent that out, so that is available. It's week 18 if you're looking at the archives as well. But Carrie Ann, I want to thank you for today's session. Great information, great updates. I do want to let everybody know we will be doing another PPP update session on December 10th. If any new major updates come down or there's changes in laws and legislation, prior to that date, we will also do a special session of the boot camp to cover that information. So be aware of that. But again, Carrie Ann, thank you. We want to remind everybody of our sessions next week, Tuesday and Thursday morning, 9 a.m. Until then, we wish everybody to have a great weekend. Be safe, and we will see you next week on Tuesday. Thank you. Have a great day.
Thanks, Robert.